We are being joined by Rajesh Palviya on the technical front, and Ajay Bagga is also joining us on the fundamental side. Very good afternoon to both of you, and thank you so much for your time. But Ajay, I want to come to you first. It feels like clearly the GDP number was something that the markets were cheering at. Record high levels coming in for the benchmark indices. How do you see the momentum continuing? Because just the last month there was a lot of volatility. The direction was a bit nervous, giving some chills out there given the correction in the small cap and the mid cap end of the market. But as of now, how do you see Indian markets placed?
uh, what happened around the world in the last 24 hours. One, the US inflation number, the indicator which the Fed uses for its policy setting, the PCE, that came as per expectations. The markets had factored in a higher number, given what had happened on the US CPI and US PPI or WPI earlier for January, which had come higher than estimates. Yesterday, the PCE number came on track, and that lifted a lot of gloom. The markets were sitting, factoring in a higher number. So the June rate cut again came on board. And today, if you see, Japan hit a lifetime high again. The Nikkei reached near to 40,000. So the US markets last night, the Nasdaq hit its lifetime high after November 21st once more, and the S&P 500 continued hitting one more lifetime high. So it was a global trend upwards. Today, Europe also is showing strength. India benefited that in terms of a very strong domestic macro on a changing global perspective, more positivity coming on the global asset markets. And India benefited with that. And on Friday, that's why we saw a very strong up move in the Indian markets. The shorts are quite embedded, and I think they were caught out today. But still, we didn't see a trap for getting set up fully. I think more because of the weekend, even though we have a contingency trading on Saturday. But I think the bulls held their hands, and I'm expecting next week, to hit 22,500 on Nifty and go further from here. So March is looking strong, Shrishti, as you said at the beginning of the show.
Well, right, Mr. Bagga, thanks for that view coming in. Mr. Palviya, I'm going to come to you. 22,000, 23,500 is where the next levels are being seen. What is your view, or 22,500, pardon me, what is your view here, and what is the next level that you are spotting? And also amid a market like this, which are the picks that you are picking out for our viewers?
So, in today's session, most of the call writers who were, wrote their, call writing position at 22,200 to 300. There is an unwinding action taken place that clearly shows that now the roadmap for 22,500 is very well visible at this moment, and we believe that in the continuation of this up move, yes, possibly we can see 22,500 very soon for Nifty. And again, the very strong comeback from the most of the banking stock, and Bank Nifty has shown very strong rally in today's session. And the major supply zone for the Bank Nifty was at around 47,200. That was crossed by the Bank Nifty also. Call writers have covered their riding position for strike of 47,000, 46,800. These all strikes were shown very strong unwinding action. So that clearly shows that Bank Nifty may also contribute to this rally going forward. So for Nifty, yes, we have target towards 22,500 in the continuation of this up move. One can keep their stop loss at around 22,200. For Bank Nifty, now if it holds above 46,900 mark, then yes, possibly Bank Nifty can extend its rally towards 47,600 to 47,800 also. Market breadth has improved. Lot many sectors have started now participating: metal, automobile, Even OMC again, after a brief correction, all OMC stocks also started participating. So I think it's a broad-based buying action on the very first day of March series that clearly shows that this March series can have another round of rally, and we can see series of new all-time high also in this month. Also, maybe we can see another new all-time high trajectory for Nifty.
Positive view coming in over there. Thanks so much, gentlemen, for joining.